Let's go over to our next slide here. This is just a reminder that today's presentation is for educational purposes only. No rate, products, or services should be confirmed with a credit union representative at the time of service. So without further ado, I'd like to introduce you to our amazing presenters, Brenda and Sue. Brenda has worked at the credit union for over 25 years. Brenda has been a supervisor for 2 different departments. She was a part of the financial wellness team previously in her career before taking on a role with our member care department. After spending some time there, she came back to the financial wellness team 4 years ago because she loves assisting our members. Sue has been with the company for over 37 years. She started out in reservations at American Airlines back in 1988 and spent nearly 2 decades working in different departments. In 2007, she moved to the credit union, where she worked in accounting and the mortgage department before joining the financial wellness team. Sue says that her favorite part of working in financial wellness is helping members find the peace of mind by breaking the cycle of living paycheck to paycheck. In her free time, Sue loves working outside in her yard and spending quality time with her family and her French bulldog, Mr. Pickles. Brenda and Sue, I will check in with you later, but for now, the floor is yours.
Thanks, Anna. Let's start out. Brenda, will you get us started by telling our participants what we discussed in last week's webinar?
Well, actually, I'm more than happy to do that, Sue. In part 1, we talked about credit basics. We explained what credit and the different types are, of course, revolving, installment, and open credit. We talked about the importance of credit, which is where we discussed how credit impacts financial health, your loan rates, and even employment and housing opportunities. We explained credit scores. We detailed the main components that make up a FICO or a Vantage score, emphasizing the 2 largest payment factors, which are payment history and utilization of credit. We talked about accessing and reviewing reports. We showed our participants how to obtain their credit reports and scores and explained how to identify and dispute those common errors. We also addressed some common mistakes and common myths that we've heard so often. Those frequent misunderstandings are things that can get in the way of our success. So we talked about those, and we're glad to have you back here today.
Yes, we certainly are. Can we get the next slide, please, Anna? Okie doke. Hold on, I'm sorry, catching up with you. Thanks, Brenda. So today we're going to build on the foundation from part 1 by exploring actionable strategies, practical tools, and long-term habits for building and maintaining excellent credit. Timely payments are essential for maintaining a strong credit profile. Setting up automatic payments or payment reminders can help you avoid missed due dates and protect your credit score. It's important to keep balances low relative to your credit limits. Lower credit utilization shows lenders that you use credit responsibly and you're not overly reliant on borrowed funds. Establishing a solid credit history takes time. There's some responsible ways to build credit, including using a secured credit card, keeping older accounts open, or becoming an authorized user on a well-managed account. For individuals working to improve their credit, understanding the credit repair process is key. Reviewing credit reports regularly and disputing inaccuracies will help with credit rebuilding efforts. And finally, a strong credit is built through consistent financial discipline. Creating and following a monthly budget, monitoring your credit regularly, limiting unnecessary debt, and maintaining an emergency savings fund are long-term habits that support lasting financial stability. Can we get the next one, please?
Thanks, Anna. What we want to address here real quickly is a few stats about the debt in the United States by generation. And we'll do that first, and then I'll course, turn it back over to you, Sue. But as you can see, statistics report that consumer debt is really up. It's at an all-time high. It reached actually an unprecedented figure of $18.8 trillion. And this record high debt is, inclusive of mortgages, credit cards, and all types of other personal loans and auto loans. One thing I want to address specifically out of this is debt is high, but delinquencies are starting also to surge. And Gen Z rather, Gen Z, these young adults ages 18 to 29 are reporting the highest, most serious delinquency rates. And this is primarily driven by an 841% spike in student loan delinquencies. It's pretty substantial.
Wow. Did you say 841% spike in student loan delinquencies?
Yes, ma'am. 841%.
Wow.
Yeah.
Okay. That is
So
something.
I know, reviewing these stats, it kind of brings back the very importance of why we're here today.
Absolutely.
Yeah.
Yep. Thanks,
Back to you,
Brenda.
Sue. Yeah.
Thanks. Can we get the next slide, please, Anna? As we discussed in our previous webinar, your payment history carries the greatest weight when it comes to your credit score. In fact, as Brenda mentioned before, it accounts for 35% of your FICO score, making it the single most important factor that lenders consider. Late payments can have a negative impact on your credit score, and it can remain on your credit report for several years. Even if you're unable to pay the balance in full, making at least the minimum payment by the due date shows the lender that you're managing your financial obligations responsibly. Here's some helpful tips. Always submit at least the minimum payment by the due date. Pay the full balance whenever possible. Set up automatic payments or reminders to avoid missed payments. And keep your utilization below 30%, and ideally it would be below 10%. Can we get the next one, please, Em? Now let's discuss credit utilization and why it matters. Credit utilization is the portion of your available credit that you're using, and it is a major factor in your credit score. Keeping balances low shows lenders you manage credit responsibly. And here's some practices to boost your score. Pay down balances before the statement closes. Make multiple payments during the billing cycle. Track spending habits regularly, and keep older, no-fee accounts open. Okay, Anna, we're ready for the next slide. I'm gonna let you take over. It's a poll question.
All right, so we have our first poll question. Do you pay your credit card off at the end of each month or billing cycle?
What do you do, Anna?
I want to say billing cycle most of the time.
Most of the time. Brenda, Sarah,
Yeah.
how about you guys?
Well, for me, it just kind of depends. How those no payment, no interest for a few months, those types of things. On those, I'll continue to make just a minimum, but make sure that it's paid off before that wraps up, But
Yep.
yeah, if I can, I'm all about paying it off every month.
And just to confirm, is billing cycle like when your payment is due? Like say someone's payment is due like on the 15th. Would that count as a billing cycle?
I believe that's right, Sarah.
Okay. I'll be honest, sometimes I don't pay the complete balance just because I want to keep like 30% utilization in there. But yeah, I do try to pay more than the payment, of course.
More than
But
minimum.
our attendees from the participation from the poll question, all of our attendees 100% said yes. So on the
Excellent.
right track. Yeah.
All right. Love to hear that. Okay, Anna, can we get the next slide, please? Thanks. Now let's discuss some practical strategies that can help you begin building credit or rebuilding your credit history. While improving your credit takes time, these steps can help you establish positive habits and gradually strengthen your credit profile. You want to limit new credit applications. Every time you apply for new credit, a hard inquiry is recorded on your credit report. While only one inquiry typically has only a small effect, several inquiries within a short period of time may signal you're a higher risk to lenders, and it can temporarily lower your score. Spacing out your credit applications, often about 6 months apart, can help protect your credit profile and demonstrate responsible credit management. Consider a secured credit card. This is a helpful tool for individuals with limited credit history or for those working to rebuild their credit. With this type of card, you provide a refundable cash deposit that usually becomes your credit line. Because the deposit reduces the lender's risk, approval is often easier. By using the card responsibly, keeping balances low, and making payments on time, you can begin building a positive payment history. And becoming an authorized user. This strategy involves becoming an authorized user on someone else's credit card account. When the primary cardholder has a strong payment history and keeps balances low, the account activity may appear on your credit report. This can help strengthen factors such as payment history, credit age, and utilization, provided the account continues to be managed responsibly. We're ready for the next slide. Thank you, Anna. Brenda, can you share some credit repair tips with our audience?
Definitely. And I'll start by saying monitor your credit reports. That's probably the most critical factor. You can get the 3-Bureau report from annualcreditreport.com once annually, and also with the credit union's credit monitoring tool in your online banking. And what you are checking for are accounts that you don't recognize or payments that have been reported incorrectly, making sure that your personal information is correct, and that there are no credit inquiries on your file that you don't recognize, because that could actually indicate fraud, believe it or not. You want to look at disputes. Now, a lot of us have, I think Sue and I did a pretty good job of clearing this up last week about disputes, but want to make a point. Please know that disputing a legitimate debt will not remove it from your credit report. Credit bureaus will investigate a dispute. It takes about 30 to 45 days. And if the debt is accurate, it will either remain on the credit file or it be added back. Disputes work best only if these are actual errors, not from valid accounts. And keep your accounts current, or if you are behind, bring those accounts current. Your payment history, again, is the largest factor in your credit score. Any payments that are more than 30 days late hurt your score, and they stay on the report up to 7 long years. You do want to address any accounts that have gone to collections or charge off. But the first priority, of course, is to review your budget first, then set up a payment plan with the creditor based on what you can afford to pay. Keep those old accounts open. Closing credit cards can increase your utilization basically and lower your credit score. So if fees on a card is an issue, ask about downgrading instead of closing, because that is an important part of your credit. And then get credit for bills like your cell phone, utilities, rent, insurance with a very easy trick. You do it with Experian Boost. It gives you credit for those things that are non-traditional on your credit report.
That's great information. Thanks, Brenda. Can we get the next slide, Anna? Those, as we said, are great tips, but what about all these advertisements, Brenda? I feel like we're seeing them all the time. Can we get the next slide, please?
You're right, Sue. You can hardly watch television nowadays without seeing those ads for debt reduction or, just clearing it all out, right? So
Right.
I just want to help you understand the difference between the two. A debt management plan, if you're considering either of these options, is probably the better one. Almost always we would say this. And it is designed for you and can be right if you can afford to make monthly payments, but you're just needing lower interest rates. You're also wanting to avoid severe credit damage. And you do want to pay all of your debts in full. And you have steady income to support a 3 to 5 year repayment plan. So it works best with those factors. Now, debt settlement, which we would tend to discourage, is and possibly could still be right for you if you're facing really serious financial hardships and you can't afford to repay your full debt. You are already behind on payments, and even to a point you're considering bankruptcy. And it could work if you have the ability to save enough money to make lump sum settlement offers to the creditors. And also, if you're willing to accept that there will be significant credit damage that maybe hasn't already been done in exchange for reducing your total debt. Another thing to think about is that anytime you settle debt for less than the amount owed is generally considered taxable income by the IRS because the amount forgiven is treated as gain. So you would receive a 1099 the following year and include that as income when you file taxes. So bottom line, the right option depends on your financial situation and your ability or lack of ability to pay your debts.
Thank you for clarifying that, Brenda. Can we get the next slide, please, Anna? So now that we've talked about debt settlement and debt management, Brenda, are there any alternatives to that?
For sure, Sue. The bottom line is before you consider either settlement or debt management, take stock of your situation and research all of your debt repayment options. Okay, again, I'll just make the point of reviewing your budget first, making sure you know how much money you have left over that you can use towards remedying those collections or charge-off accounts. One option would be if your credit is decent enough, you could take a debt consolidation loan. And it's exactly what it sounds like. You're putting all of your debts into one payment and potentially having maybe a lower payment and lower interest, right? Another option would be to negotiate with your creditors. You could contact them yourself directly, talk about maybe lowering interest rates, perhaps a reduced payment plan. And most creditors have their own hardship programs. So that's also something to think about. And then after, again, we'll talk about the budget. When you know that you have enough money left over after all of your bills are paid, you could look at the debt avalanche or snowball methods to get things paid off. The avalanche is listing all your debts and paying off the one with the highest interest rate first. The snowball method is paying off the smallest balance first. And of those two, which one sounds most attractive to you, Sue?
I would be the personality that would have to go with the snowball method. That would motivate me by seeing the debt paid off and moving on to another credit card. In order to stay motivated to save money, I'm definitely the snowball method. How about you, my friend?
I agree. Yeah, instant gratification. I want to see some action. Oh, how about you, Sarah, Anna? Any comments?
For me, I'm an avalanche girl. I don't
Really?
know. Yeah, I don't know. I just want to get that big number out of the way. But
Okay.
I do also I see both sides of it, like the instant gratification as well. What about you, Anna?
Snowball for sure. I've done it before and I'm doing it now as well. So I like that one. Just seems easier personally.
Very good. Well, there's a new one to the family. It's called the snowflake. And what it is basically is just taking that bound quote unquote money. Could be a income tax refund. Maybe you sold something, maybe got money as a gift from a family member. and you just take that, make your regular monthly payment, but apply that snowflake money to the debt too. And it's a slow and progressive way to do it, but as long as we're getting that debt down, that's the whole goal, right?
Right.
All
Okay.
right. Next
Thanks,
slide,
Brenda.
please. You bet.
I'll let you take this one, Brenda.
Oh, yeah, for sure. This is one, Sue, when you and I were talking about this, you thought it'd be a great idea for our members and viewers to take a snapshot of this one. I really like it because it
Yep.
does clarify a lot of concern about aging debt and how that works. So negative remarks will remain on your credit report for a specified period. Removing it from your report only means it no longer impacts your credit score, but it does not erase the debt itself. And collectors may still attempt to collect payment. So that's important to know when these are accounts that have been closed and are not in good standing. And there are a few key details about this type debt. So there's legal obligations, and that means the debt remains yours and creditors can still seek payment, though they cannot report it to the bureaus. There are statutes of limitations, excuse me. Even if it is off your report, a debt might still be within a statute of limitations, which is usually between 3 and 10 years, meaning you could still potentially be sued for it. And then there's time barred debt. If the debt is past the statute of limitations, it's considered time barred. And what this means is a creditor cannot legally sue you, but they may still choose, or rather, I'm sorry, you may still choose to pay it. And then restarting the clock. You might have kind of heard about this one, but you can definitely change the trajectory of debt that might be falling off and going away. If you make a partial payment or acknowledge the debt in writing, this can sometimes revive a time barred debt, which it restarts the legal time limit for a lawsuit. So that's something if you've had, have things in collections you want to be careful about. Only after, again, you've reviewed your budget, you have money to address it. Don't start and stop, basically.
Right.
And then collection actions. If the debt is sold to a new collector, they may try to contact you, even if the original debt is no longer on your credit report. So a few factors about that, right?
Yes, that was really good information. Thank you for sharing all that with us, Brenda. The next slide is for you, Anna. Do you want to see if we have any questions out there?
I don't see any questions on my end. Sarah, do you?
Just one quick question. Can you explain more about making multiple payments on your credit card during your payment cycle? And you said that's a good thing.
Sure, I can take that one, Brenda. I actually do that myself. So I make multiple payments during the month towards my credit card debt. It just keeps my utilization lower. And when it gets reported to the credit bureaus, sometimes it'll be reported where the balance is showing lower. So once again, let's say you have a credit limit of $500 and you want to keep the utilization at 30% or less. So that's $150. By making multiple payments throughout the month, sometimes it might show my balance is only like $25 or $30, which helps my utilization, which ultimately helps my credit score. Do you have anything to add to that, Brenda?
No, I think you couldn't have said it better. Yeah.
Yeah.
It's a good thing if you can, afford to make multiple payments for sure.
Yep. I see one that came in on my side. I don't know if anyone else sees it, but it says, I'm listed as an authorized user on my dad's account, but I don't see all of his credit history on my credit report. Why is that? And while I'm reading it, do you want to take that one, Brenda?
Yeah, sure. So not every lender reports authorized user history. I know that, we consider it a credit building opportunity, but that's something that maybe the person that you're asking to become an authorized user on, have them check with the lender to make sure if that's your goal to get some credit history built, because not all lenders report authorized user history.
Yep. Thanks for clarifying
Thank you,
that.
Brenda. For the sake of time, I'm going to hold off on questions until the end of the presentation and moving on to our next slide. Thank you.
Thanks, Anna. A core habit of financial health is understanding where your money goes. Tracking your spending helps reveal patterns, identify problem areas, and it allows you to make informed financial decisions without feeling overly restricted. By monitoring your spending regularly, you have a clearer picture of your financial habits. It helps you identify opportunities to save more, reduce unnecessary expenses, and stay aligned with your financial goals. To make managing money easier and more consistent, consider setting up automatic transfers to savings and investment accounts on payday, so saving becomes effortless. Or use automatic bill pay to reduce the risk of late fees, missed payments, and unnecessary stress. Achieving financial success requires balancing the growth of your assets while responsibly managing debt. In today's financial environment, it means being intentional about saving and proactive about reducing obligations. Start saving early for retirement by contributing to your employer-sponsored retirement programs such as a 401k. In 2026, the annual contribution limit is $24,500. Contributing consistently, especially when employer matching is available, can significantly strengthen your long-term financial position. Remember, long-term financial success is not a set it and forget it process. It requires awareness, discipline, and regular evaluation of your financial progress. Try to avoid lifestyle inflation whenever possible. As your income grows, many people feel tempted to increase spending across the board. Instead, keep core expenses stable and direct raises, bonuses, or additional income towards savings and investments, and that can significantly accelerate your wealth building. And lastly, regular financial reviews are so essential. Schedule routine check-ins quarterly or at the very least annually. It allows you to evaluate your cash flow, track changes to your net worth, and ensure you're making the progress that you want to make towards your financial goals. We're ready for the next slide, please. Brenda, could you share how we can assist our members in building and strengthening their credit here with us?
Yes, Sue. So we can encourage our members, of course, to enroll in credit score monitoring through online banking, where they will be able to view a no impact TransUnion credit report. With credit score and reporting, our members will have access to their report and score, able to see debt to income information, able to create goals, credit goals, right? And see those personalized loans and deposit offers. It also offers an amazing array of additional financial insights, tips, and tricks that we don't always think about. It's really simple to sign up. Just go in online banking, open the financial wellness menu, and select credit score and report to sign up today.
You make it sound so easy, Brenda. Thank you. Can we get the next slide? And I'm going to let you take this one too, Brenda.
Oh, yeah. Well, online, we can also see the budget and spending hub. This is new to the credit union's online suite of tools. It's amazing. Anna and I both actually were on the team who kind of tested this product. We fell in love with it day one. To find it, I'll start with that. When you log in, there's a widget. It's right above accounts in the account overview page. What it features is a real-time dashboard, so you're able to see your finances as they happen. You have the ability to connect accounts from other financial institutions. You're able to spend, or rather see your spending categories with charts and analysis, and generate budgets based on your spending and savings histories, and even set up custom categories. It's amazing. It's super cool. So if you haven't signed up, you need to check it out.
Okay. Thanks, Brenda. Can we get the next slide, please, Anna? All righty. And as we wrap up, remember, you have the power to change your financial story, and you don't have to do it alone. Connect with one of us in the financial wellness team, and let's get started today. Our team's here to support you with boosting and rebuilding your credit score, creating realistic budgets and tracking your spending, strengthen your savings and spending habits, We can even help you manage your checking and saving accounts effectively. We're here to help you avoid costly payday loans and explore alternatives to bankruptcy. We also offer educational seminars and webinars throughout the year to help you stay informed, confident, and empowered. So if you're ready to take next step, schedule a free, yes, free, confidential appointment with one of our counselors. You can see our number on the screen. It's 833-346-9355, or you can email us at financialwellness@aacreditunion.org. And Sarah, I'll let you take it away from here. Next slide, please.
Alrighty, really quickly now, guys, I'm going to go through a few announcements. If you're not a member already, you can easily do so by scanning that QR code and using promo code BD4412 at the end of your application. That way you can enjoy all of the member benefits the credit union has to offer and be able to meet with our wonderful financial wellness team and these wonderful ladies. Next, we have a few current offers from now until the end of the month. So be sure to check those out on our website. Whenever you enroll in online statements by March 31st, you're entered for a chance to win $1,000 cash. But be sure to check out those offers on our website and be sure to check out our events page to see our upcoming events. We have 2 more shred days at the in this month. And then we have some car sales coming up next month. So be sure to check those out as well as our webinar offerings that are coming up as well. But Anna, I don't see any more questions on my side. Sue and Brenda, nothing else?
I don't
I'm
see any
sorry.
on my side now. How
No,
about you,
I
Sue?
don't see any.
Perfect. So to our attendees, thank you again for joining us. If y'all have a personal question or something else you'd like to ask our team or credit union representative, be sure to let us know on the survey that you should be receiving in your email. You may have to check your spam, by the way. So be sure to keep an eye out for that to give us feedback, or if you have any other additional questions, be sure to follow us on our social media pages and check out our YouTube for previously recorded webinars just like this one. But thanks again to our financial wellness panel, and thanks to our attendees for joining us today. We will see you on the next one. Thank you, guys.
Thank you,
Thanks, everyone.
everybody.
Good afternoon.